Good morning, traders. I'm Antoine Farrar back with another video with Digital Goatz Academy. Welcome to our weekly review. So let me go ahead and pull up TradingView right now, and let's look at basically what the market produced last week. So obviously, I start off with S&P. Anybody that's following this channel already knows that we talk specifically about indices. So if you are tuning into this video, definitely hit that like button, comment, and subscribe. But let's get right into it. So I am doing this on my iPhone. We had a lot of positive feedback from people seeing it being presented on the iPhone. So we're going to start to do more videos like that, traders. So anyway, getting into S&P, right? So if you could just see my screen, let me actually get rid of that EMA. So you could just see my screen. Last week, S&P was extremely bullish since Sunday, right? So if we look at this black box area, I know y'all can see my cursor because I double checked. This black box area is where the market basically gapped down to last week, and it was bullish since Sunday. So we did break above Sunday's candle, which is good. So we know that the market is in fact bullish. So our expectations for this coming week should possibly be a short-term pullback. For me, I would like to see S&P actually push back down to this level. Hell, we can get it to the top of Sunday's breakout. That'd be even better for a confirmation, or maybe like price decides to pull back to this consolidation 100%. But the news that were pushed out this week, any form of news that was pushed out this week, it didn't make the market react volatile. It actually strengthened the market's positivity into a buy direction. So I know that there was a lot of high impact news, but it really didn't do anything to the market. Like I said, the only thing it did was continue the market's objective, right, which was to keep buying up. I think, what did we have? I think Trump had a where was he at last week? He was with NATO. So I know he was doing a speech with NATO. On top of the next day, Jerome Powell, president of the Federal Reserve, he had a conference, or he had a testimony that he had to deal with in front of Congress. So all those things normally impact the market greatly and makes it have like strong volatility, but it actually didn't, which was what we wanted to see. And these were kind of some of the things that we did project already, that we expected the market to be bullish. And then if it broke up out of this area, it would probably continue. But now what we need, if we're looking at on a daily time frame, let's do the weekly. So you see how aggressive that weekly candle got, right? So there's no guarantee that this thing will even come back to these levels that we were looking at right now. It's so aggressively bullish that we could probably start consolidating and then continue pushing up from there. I do expect some type of pullback. So if we put a fib to this, let's look. Let's put a fib to this weekly candle that just got produced the prior week, right? So obviously we want to go low to high. Best way you can do it. So I'm making sure I get the bottom of that low for that bullish engulfing, and then where the market pretty much rejected back to. So you can see it did a slight pullback, um, which I'm hoping that we get a gap down, so that way the market can continue pushing down and then actually give us a buy back up probably like Monday or Tuesday. But anyway, the market closed bullish. We know that for a fact. So anytime the market has closed bullish on a Friday, what has happened, traders? We can expect that that's going to be the next move for the prior week. The only difference is that this is so aggressively bullish, we want to see some type of pullback. Well, where would our pullback area be? At the very least, at the very least, we want to see 50%. So where it says 0.5 at, so that's 60, 63. Now, if I'm just being honest, I would probably like a deeper retracement. We have a lot of data on the left side. Let's get rid of this Fibonacci. Let's get rid of this Fibonacci real quick. We have a lot of data on the opposite side, right? The left side. So you see on this left side, we have a lot of data, even the immediate left. So where the market broke out of, where this purple circle is, that's a gap. So, what have we learned about gaps as we've been trading this entire year? More than likely, the market likes to push back to those gaps. Now, because we've been so aggressively bullish, let me see. Because we've been so aggressively bullish, it wouldn't surprise me if the market wanted to pull back a candle 100% of this bullish move. Now, I'm not expecting that because the stock market has been bullish. So I'm not expecting it to do such a major pullback like that. If anything, if it does that, it'll be later on, my expectations. But I do want to see it at least come back to that gap, which would be around what of our Fibonacci. Let's actually pull it back up again. And you start seeing how these things line up. Oh, didn't mean to do that. So where does our gap line up with? It lines up with pretty much the top of the gap. It lines up with our 618. So that's 61.8% of the market. Or really, if you're looking at 786, you know what I'm saying? Because 786 would push it into the gap. So 59, that is actually the area that I was looking for S&P to actually return back to. 59.99. So that's where I would like to see it come back to. I don't know if we get that. Our shallow pullback would be like 60.17 as far as like another buy opportunity. But I do want to see it come back as low as 59.99. Now, if it comes lower, that's even better. So our next area would be like 59.20. But I would at least like to see it come back that low. I mean, that's only to confirm like a better buy option for us. You know what I'm saying? Instead of trying to, because the market will probably do like a shallow pullback, trap buyers in, then try to sell the market completely off in order to wipe out the buyers, then push back up to wipe out the sellers. You see what I'm saying? So we're bullish. If you turn it to a Hakanashi candle, again on a, what is this, the weekly or the daily? Weekly time frame. Turn it to a Hakanashi candle, you can literally see the momentum. As soon as I find out where it's at, right there. Momentum. So to me, how this candle closed, like it'll probably, nah, I don't want to speculate, but if we're going off of how the market should be moving, then the market should gap up. You know what I'm saying? Now, if it gaps up, then we're probably not coming back to these areas, these lower levels that I was speaking of. So we'll just have to play it by ear to see how the market reacts. I'm hoping to gap down, but if we have a gap up, I'm obviously gonna have to reassess what the market is doing. Now, our last move that closed Friday wasn't like a strong bull move. So that right there already shows you that the market possibly wants to come down. This is on the 4-hour time frame. Possibly wants to come down. Either way, we know how market structure works. It doesn't give you the pullback right immediately, but we still would like to see the market pull back some. Now, if the market is bullish, what's going to be priced in is a rate cut. So if the market doesn't come back to these levels like this week, and we keep thinking like I don't want to gear us towards sell again. If you've been following us, we're not gearing towards a selling opportunity. So if you take a sell, just understand that that sell is going to be short term, and you don't need to be trying to hold it for like a Hail Mary. Now you may get an opportunity like that, but what's the major news that's coming up within the market soon? The possibility of a rate cut. If the whenever a rate cut is introduced, that means the market is too bullish. Same thing as a rate hike. If the market is too bearish, Federal Reserve steps in, hikes the market up. That's the best or simplistic way I can explain it to people that have no idea about trading. So the market is aggressively bullish. There's going to be a rate hike, a rate cut to induce it. It's basically just to correct it. So the talks of a rate cut being implemented in September means that more than likely we are extremely bullish right now. And until we get that major news for a rate cut, we may not test these levels that we're expecting. I just want to point that out because a lot of traders, this is where we get lost because we don't pay attention to the market being so aggressively bullish that we can just keep buying up. We're expecting a pullback. It never comes until like a year later. You know what I'm saying? I'm telling you, I did this stuff before. So the fact that we are aggressively bullish, we'll have still, consolidation periods, minor pullbacks, but we're talking about pullbacks that we're expecting, you know what I'm saying? if those we don't want to train our mind to expect that next week or the following weeks. We just want to be prepared for when it happens. So to me, the market is still bullish, but I would like to see it come back to these levels. If we get it to these levels, then great. I don't have a concern about the rate hike that comes up in September. But if we're still bullish and then we haven't had no correction, that'll probably be that major sell that the market is trying to correct itself. But this is good because it's giving earnings. So if you see, there's a lot of companies out there doing better. You know what I'm saying? There's a lot of companies, share prices are going up in value. So this is how the market works whenever it's extremely bullish. It has to pretty much make money and then pull back. But it's not gonna take money unless it's straight losses. You see what I'm saying? Let's go over to US 30. Now, I do want to look at the NASDAQ real quick because I do have a lot of stocks that are powered by the NASDAQ, and the NASDAQ made what? It made a new yearly high. The NASDAQ made a new yearly high. So again, when these highs are made, the logical explanation or the logic behind it is what? Well, I need to start looking for a sell because the market made a new high. Absolutely not. We have to see how the market responds and expect pullbacks, but don't train your mind to think like that because the thing that I've seen that traders do is that, oh, it's a new high, so it's probably going to pull back or it's probably going to sell off and stuff. That could be possible, but we don't know if this is the new high yet. The high could continue and then start to sell off from there. But again, how aggressively bullish this is, like look at it. Look at all this green. This is Hakanashi candle form. So you're seeing it literally on the weekly time frame. The momentum is carrying to the upside. Nothing has changed. And when you look at it, it hasn't even been strong. It hasn't even actually broken out yet. The NASDAQ, it made a new high, but it hasn't actually broken out. So when it breaks out, just like S&P did, um, was it S&P or US 30? No, US 30 did. Made basically a straight line. No, S&P did do that. Made a straight line after breaking out. You know what I'm saying? We haven't even gotten there for the NASDAQ. So what is looking like is that we're still bullish. You know what I'm saying? Like just kind of reviewing it over the weekend, it looks like we're still bullish. And any pullback, again, we've been saying this, any pullback is going to be a move to push the market back up. We've been saying this. Any pullback is going to be a move to push the market up. So you're better off taking the buy than you're better off taking the sell. So same thing with US 30. Wow, man, super aggressive. Super aggressive. It's been a minute since we've seen a candle like that. So we're looking at US 30, drawing a fib to it. Where would we want to possibly start looking for buys? Probably around 42.9. You know what I'm saying? Really, if you're looking at the structure, where the structure is at, 42.7. But again, the market can go as low as it wants to. Now, this this market is aggressively bullish, right? So I don't want to. Again, I don't want to train us to look for even a pullback this deep, and the market starts doing this scenario. Because always look at options that the market can make move, right? It starts consolidating. So it starts bouncing between 38 to 23%, but it's not really selling off or pushing down. It's just pulling back slightly in order to start creating consolidation to continue, because this was a major move. The logical thing is to expect it to pull back, but there's other moves that the market use in order to correct itself, which is consolidation. What could we have? We could have, like, again, a gap down that pushes us back to either 238 or 382. I'm thinking 382 because of how aggressive this candle is and stuff. So again, if you followed me throughout the years since I started talking about trading, you know that I've mentioned that the stronger the momentum, the least aggressive the pullback. So because we close now, we are going into Sunday, so that kind of changes the conditions. But I mean, we're in Sunday or whatnot, so we're going into the market open for a new week. So that kind of changes the conditions. But anytime I've seen the market be aggressively bullish like this, it's normally done a shallow pullback either at the 238 or the 382. It confirms that it's buying up at the 382. Oh yeah, this market is going to the moon, yo. Into the moon could be 45K, and then after that break could be 50K. You know what I'm saying, for US 30. My expectation by the end of the year, maybe going into next year, is that we see US 30 at 50K or close to it. It's only 50K is only $5,000 from, you know what I'm saying? I mean, it's a point system, so it's really 50,000 pips, you know what I'm saying? But that's not a lot in comparison to US 30 looking at where we came from. I mean, the low that we had for this entire year, we look at the low, was what? $36,000, 36K, and we have not come back down to that level. You know what I'm saying? So it's not far fetched to believe that US 30 could hit 50K. Remember, the buy is longer than the sell, traders. The buy is longer than the sells. Not to mention, this is the exact US 30 chart that I had with Oanda since 2023. So I've been basically tracking US 30, trying to get a handle on it. You know what I'm saying? And it's been playing to exactly how we've been predicting it. The only thing is that we've been getting beat up on some of our entries. But again, if you really just set this is where I introduce like not introduce, but more so emphasize the concept of using pending orders. How many times have, this is kind of sidebar, but how many times have you been correct but your entry was off and you got burnt because your entry was off? Well, guess what? We can use pending orders in order, if you're comfortable, you know what I'm saying, and if you are comfortable and confident within your charts, in order to let the market come down or rise up to us, and then get our entry from there. Maybe you do an entry that's not exactly where you want to enter, but so the market can put you in there and you can kind of see. One thing I learned from one of my mentors is that it's okay to enter the market at a 0.01, see what it happens, and then correct yourself from there. Then you can start upping your lot size. You understand me? So I think this is exactly what we've been talking about. This is a great year for traders. This is going to be a great week for traders, investors. We just got to lock in. We know July, Independence Day is coming, so obviously the market won't be open then. But again, anything that has been made off of this data and stuff is being priced in now. So I think that we have more positivity, and I don't think that until we get clarity on how the market opens up today and stuff, I still think that we're bullish. The only thing is, I'm just trying to catch where these pullback areas are. But don't get trapped in the sell and get punched in the face because of that. You know what I'm saying? We're buying up for sure, yo. We just have to see where the market pulls back. Like I said, it could be a shallow pullback, how it opens up. If it opens up bearish, great. I want to see it, how far it'll push down, and then see how it buys back up. But we've been seeing that. Like I said, we've been seeing that, traders. We've been seeing how it closes on Friday bullish, and then it either gaps for Sunday, and then it'll come back to reclaim that later, or it gaps down and then it starts correcting itself in order to buy back up like towards London and stuff. So that's what I'm looking at, or like New York. That's what I'm looking at. As you can see, Bitcoin is still buying up. So yeah, Bitcoin is bullish. If you just look at it on the monthly time frame, Bitcoin's still bullish. Yeah, cryptocurrency is basically doing well. And you see exactly what I was talking about. So Bitcoin did what I'm expecting US 30 and S&P to do. So you see this? This is consolidation right here. I'll see with my cursor. Take my cursor, yeah. This is consolidation right here. So obviously we need a break above, but the fact that we're pretty much consolidating right here. We did a shallow pullback, almost touched the high of this position, almost close to it. You know what I'm saying? And now we're pushing back up. And I even mentioned that. I even mentioned that we could possibly push down here. So now that we have that clarity, yeah, I'm thinking once we get, you know what I'm saying, whatever reaction we get today, like we're still buying up. Cryptocurrency is still positive. Not to mention Bitcoin is still playing off that inverted head and shoulder we drew like 3-4 months ago. You know what I'm saying? So yeah, we're still playing off that inverted head and shoulder. So yeah, this is support right here. Might have a pullback either 100% or somewhere back to this high to confirm it. But this is bullish as well. Let's look at what it looks like as the Hakanashi candles. Same thing. I mean, it's consolidating, so putting up the Hakanashis and it's consolidating, that's not really because it still has to break out. But we're still seeing what we like to see from this last move. So at least from this last move on the 8 hour, let's bust it down to like a 4 hour. Yeah. From this last move, the market was bullish. So if anything, if we do have a pullback, it'll be somewhere maybe right like around 103, possibly because that was where the high broke out of. But again, this is Bitcoin. Well, cryptocurrency, it is Bitcoin, but it could do whatever it wants. You know what I'm saying? If the momentum is too strong, this kind of looks like what we were looking at for what am I trying to say? US 30 and S&P when they broke out of their highs, they did not pull back. So Bitcoin could do the same thing. And if any and to be honest, because we're seeing it like that, I might take a buy from Bitcoin and see how it reacts. My next level for Bitcoin was 120, 125. So if we can get a move like that, let me see. Let me measure it up. I might take it. I stopped trading Bitcoin, but I might take it. Yeah, 120. That's $1,000 move. Really, if Bitcoin was priced in the way we do like indices, that would be like a $12,000 move. But I think because the way they do cryptocurrency, I think that's only on a point zero one. I think that's only 120. That might be $1,000 move, but I gotta see. I think it might be only $125 move and stuff. But I'll see. And obviously, when we go into this week, traders, I'll inform y'all on the state of what we're looking at for the things that we discuss. But that's all I got for today. So I'm locked in. I'm excited, yo. You know what I'm saying? Even with the losses, like I'm excited because one, we've been doing this stuff in the stock market as well. So everything we've been predicting in the stock market or forecasting in the stock market is actually lining up with what we see in the currency market and stuff. Again, it's not going to be exact because it's like S&P against the dollar, US 30 against the dollar, Bitcoin against the dollar, oil against the dollar. It's not just these entities alone like how we would be doing in the stock market. So there'll be some fight, you know what I'm saying? There'll be some manipulation, but we're still seeing what we wanted to see, what we called since January of 2025, traders. Talk to me. But this is Antoine Farrar signing out. I will see everybody on our next video, which will be market forecast. And I hope everybody has a successful trading week. Definitely tap in. And again, I'll see you guys on the next trading video. So lock in.